My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. So if you've tuned into the podcast before, you know we've talked to a ton of people in the multifamily space. We've spoken to quite a few people who are in the industrial space. Very rarely have I spoken to somebody who invests in both of those at the same time, but that's exactly what today's guest does. So Nick DiLeone is a real estate investor. He comes from a background of working for the big guys. So he worked for a number of years with institutional real estate companies. He then decided to hang his own shingle, do his own thing. And that's what he's doing, focusing on apartment buildings, multifamily properties, and triple net, single tenant industrial warehouses. So Nick, welcome to the show. Great to have you.
Thanks for having me.
So Nick, tell us a little bit about what the portfolio looks like today as of the middle of 2025. What do you have in the portfolio? What's kind of your buy box for apartment buildings? What are you looking for warehouses, and where are they?
Yeah, so we, like you said, we focus on multifamily value add. We've closed a bunch of RV park deals. So
that's another a whole other class I forgot to mention there. Okay, RV parks.
But in all transparency and honesty, you know, like I'm acting as an advisor on those deals.
Okay.
I'm not as involved on those deals as I am on the multifamily in Texas and the industrial in Texas. And then the industrial, right, that you talked about. So oddly enough, we closed a multifamily deal and an industrial deal on March 14th, the same exact day. It was kind of crazy that we did it. And my multifamily brokers were kind of busting my chops like, wow, we closed this deal, that deal, but you closed two deals in one day. That's pretty amazing. So we didn't plan on doing that, but it was pretty crazy.
Yeah.
So you know, institutional background, work for big companies, work for a value-add industrial shop out of San Francisco. So this deal that we closed in March was the first time that we closed an industrial deal on our own.
So it was exciting. March of this year.
Yeah, March of this year.
Nice, congratulations.
Yeah.
So your company, your own company, Leone Real Estate Partners is relatively new. Is that what I'm understanding?
Yeah. So on the multifamily side, the deal that we closed in Texas, I have two newer partners as GPs, and then another partner that I know from a mastermind that's actually on the industrial side. He's been doing triple net sell leasebacks for about 15 years. So I call him like a triple net ninja. So he really knows the space really, really well.
Yeah.
So yeah, great partnerships, and both those assets, you know, kind of 4 months in are performing really well.
So are in these deals, Nick, and for what you're planning to do in the future, are you going in as a co-GP with other general partners on these projects? Are you like the lead sponsor on them? What's your role in the whole setup?
Yeah, so it was kind of a transition. When we first launched the business, we needed to support our family, so we invested as an LP and sometimes as a small GP in other people's deals, right? Over time, we've kind of graduated to the point where it's like, okay, we're going to be the lead GP, lead sponsor on all our deals. We're not going to invest in other people's deals. We're definitely going to co-invest. We're going to co-invest bigger in our own deals to show that we believe in the deals. So, you know, we're the lead sponsor in all our deals going forward in Texas. Nice.
So it's you and who are your partners in the business?
So on the multifamily side, I met them through some like masterminds. So Andrew Machado here's local here. He's also from New York, so we kind of connected that way. He has a private equity investment banking background, kind of institutional background, smart guy. And Ellie Phelps, she's based out of California. I've met her through a mastermind, some of my partners. She's a little bit newer, but she's a killer. She's really good. She's diligent and aggressive, so she's been awesome. And then on the industrial side, my partner, Scott Hare, he works for a family office, and this is kind of the first time breaking off on his own and using that skill set in the triple net space.
Interesting. Okay, so most of you guys are kind of coming from working for larger type companies and you've kind of learned the ropes, got paid to learn, which is a very, very smart way to do it. And then you're bringing that skill set and those propensities into your own business. I'm curious though, Nick, so how does it work? You kind of got certain partners that are involved in the multifamily side, other partners involved in the industrial side. How do you kind of keep everything moving together? How do you have those kind of dispersed partnerships within the same company?
Yeah. So one thing that we just did recently is we've had a kind of internship program for, I don't know, over 3 years, and it's been rotational, right? People in school. We kind of stepped it up a level, and we've brought them on as 1099 people that help us. And so we have this one person that's doing a lot of the stuff that I used to do. So for example, for the industrial deal, we're in the process. It's a really short-term home. We just bought it in March. We're going to list it for sale here pretty soon. It's a special type of deal that kind of, we intended to do that. So he's helping to build out the kind of sales process, compiling broker information, doing all that stuff, where he's never really been exposed to a lot of this stuff. He's learning a ton, and I can kind of tutor him and teach him the rope. So that's a big part of it. He's kind of playing both roles and doing a lot of that stuff. He's helping out my partners. My partners are getting the benefit of that. So yeah, and I kind of sit on top of a lot of this stuff with the investor relations and that sort of stuff, where they're helping with some of the more detailed work in CapEx and managing the properties.
Got it. Very good. So a lot of real estate investors, they focus on one asset class versus others. You're kind of combining multifamily with industrial. Can you, just for the benefit of the viewers and listeners, compare and contrast the two and let us know why you've decided to do both?
Yeah. So multifamily, generally we focus on cash flowing assets. Not everyone does. So like, we like the fact that going in there cash flowing, generally we put fixed rate debt on the properties. A lot of times we assume a loan to kind of keep the interest rate risk lower, at a lower interest rate than today's rates. And there's their whole argument, like housing is never going away. People always need housing. It's a required thing. So that's why we like multifamily. On the industrial side, I was always thinking about maybe getting back to industrial, because that's what I did at my last W-2. It's another great asset class, right? It's kind of the two property types. When I worked at Nuveen, we called them the 4 food groups: office, industrial, retail, and multifamily. The 2 favorite property types are still industrial and multifamily. For multifamily for the reasons I discussed, and industrial, last mile industrial, Amazon, that sort of stuff. So I always kind of thought I would get back into that space. I met Scott through a meetup, a national meetup, but he's local here in DFW. Really good guy, really smart guy. And he had this expertise. So it's like, okay, well, I could do what I did before, which is small bay industrial, or we can kind of leverage his skill set and his network and even his pipeline and kind of focus on that strategy. So that's really kind of what drove the strategy there. So
interesting.
It's risky. A lot of people, when they hear single tenant, they get scared. We bought this property knowing that the tenant was going to potentially leave in a year. And that was part of our strategy. That was part of kind of the upside scenarios, that they would not renew their lease, and we can sell the property to an owner user, which is basically a business owner, owns the business and wants to buy the real estate. And that real estate has a lot more value to them than an investor, because they get all the cost segregation that limited partners get on their own. They get a lot of tax benefits, and they like the control. A lot of entrepreneurs are control freaks. They want the control. They don't want to deal with a boss that's a landlord. So
yeah, they don't want to be paying triple net on something they could own themselves, right?
Exactly.
Yeah.
So that's the strategy for that asset. We're going to list it for sale, targeting owner users, targeting tenant representation brokers. There's commercial brokers out there that just focus on tenants. So we're going to focus on that first to get an owner user. And if we can't, then we'll sign a kind of a listing agreement with a a seller's broker. But for now, my partner, Scott, is also a broker. He can act as our seller's broker on the deal.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Excellent. So how do you typically structure your deals when it comes to investors and raising capital, Nick?
Yeah, so the multifamily deals, our Waco deal that we exited last year, our Oaks Chain Lane deal here that's in the DFW area, we generally do a 80-20 split, pretty straightforward.
So you're doing a traditional syndication kind of thing.
Yeah, we do a syndication, friends and family. That's how we do it. And it's interesting, the warehouse deal, and you're probably interviewed a lot of multifamily syndicators. It's much easier to raise capital for the warehouse deal for two reasons. One, the discussion around the deal is that the recycle of capital and how quickly we're going to get the capital back when we're going to sell the property, basically, it's going to be really quick, 12 to 18 months. And people are like, oh, that's good. You're not going to hold on my money for 4 years, 5 years. Number two, a lot of people have been burned by multifamily syndications.
Absolutely.
So it was almost like a dirty word. Even though our track record is very strong, we're paying out distributions, we're truly conservative, we're not defaulting on loans, we're paying out distributions, whatever. We ran Facebook ads and we got 2 times the clicks on the warehouse deal than the multifamily deal, just because people didn't want to click that thing. They didn't want to dig in to see no, our track record's good, whatever. It's just, I'm not touching it. I have bad feelings. I don't want to touch that.
Yeah, I like how you put that multifamily has almost become a bad word in investing. And that's, justifiably, a lot of operators have lost a lot of money for a lot of people, given the current circumstances. So capital raising is more challenging these days, Nick. A lot of people say so, at least. What are you finding that's working well for you guys besides word of mouth and referrals to generate new investor leads for your business?
Yeah. So one of the things that we did was we ran some Facebook ads to raise capital. We just mentioned it. And one of the mistakes I made was to focus too much on that. So really I kind of look at like concentric circles, right? You should first focus on your friends and family, the people that you know really well and know, like, and trust
pre-existing relationship. Yeah.
Yes. And focus on that, because a lot of times when I was thinking about starting my own business when I was out in California, I talked to those guys. They knew I was a real estate guy. They're like, look, I'll invest $100K or $200K or whatever deal comes your way, because I know, like, and trust you, without even understanding the details. So you want to start there first. Then you go outside of that, maybe kind of your neighbors, you've casually talked to them about that, kind of go outside that. Then you go to that, like, you don't know people, the personally. Facebook ads, that sort of stuff, right? You want to use that last, but you want to equally kind of go through all of your network and kind of do that. So we had some success with the Facebook ads, but I was too focused and too excited about that. That was kind of a shiny object for me.
Yeah.
And if I had to do it over, I would have started in that inner circle and kind of keep focusing on that.
Very cool. So Nick, what are your plans and goals for the next 12 to 24 months? Where do you guys see the company going?
Yeah, so our goal this year was to do another multifamily deal. We closed those 2 deals this year, but we kind of count them as last year because we kind of got them in contract in 2024. So is to do one multifamily deal in the 200 to 300 unit range, and then another triple net deal, both in Texas, in that $3 to $10 million range. That's our goal. Now, we talked about this kind of pre-podcast here. I had a very large capital partner that I was looking at deals with, foreign capital, over $200 billion in AUM. Very big capital partner. We're offering on deals together, and they've kind of paused in looking at real estate. So we're kind of in the market looking for other big check writers, because it's good to have the friends and family capital, but it's also good to have those big capital partners, because you've probably seen this in the market. It's very hard to raise capital. So the deals that have a $2 or $3 or $4 million raise are a little bit more competitive. If you kind of go above that, a $10 million raise, very hard. You need a big check writer. So that's the space that we kind of want to play in. We're talking to a few family offices that are kind of interested in multifamily and industrial. So we're in the market kind of looking for capital partners.
Yeah, that makes sense. Well, this is very, very interesting, Nick. I admire how you've combined multifamily with industrial, pros and cons to each. It's interesting to know that, twice as many people were interested in the industrial versus multifamily in today's environment. That's good data to have there. I'm sure there's going to be some folks watching or listening to this who'd like to connect with you. Where should they go?
So you can check out our website. That's www.leonerepartners.com. Or you can email me at nick@leonerepartners.com. We have some podcasts up there. We have some educational information, some virtual meetups that we've done on how to underwrite properties and things like that. We have testimonials for our investors, and feel free to reach out.
Sounds good. Nick, thanks very much for being on the show. This has been great.
Thanks, Dave.
All right, everybody. See you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.